All right, guys, we are getting close to the end. You literally have 5 days left to check out the recordings from our 4-day workshop a few weeks back. So do not procrastinate. I would not advise trying to watch it all within a single weekend, but spread it out. That way the information can marinate and you can actually retain it. So if you haven't done so already, head over to www.tier1trading.com. Click the banner that says Emergence 2021. Sign up. We will shoot you the recordings and you can have at it. All right, do it. So everyone starts off by looking for the best strategy, including myself back when I was a younger trader. What if I told you the best strategy may mean not having a strategy at all? Check it out. Hey guys, Akil here. Welcome back to another episode of the Trading Coach Podcast. Today we're going to talk about strategies, and this comes from a few things. More recently, a conversation that I'm currently having on Instagram right now with a trader that I work with, but also something that I brought up yesterday in an interview that I did where I talked about kind of my journey and not the regrets, but some of the, I guess, the biggest lessons that I learned from when I was what I thought was learning how to trade. And to go back to that, one of the biggest lessons that I learned when learning how to trade was that I should be focused on learning how to trade instead of what to trade, right? After I went through the period of struggling and trying to do it on my own and failing and reading books and failing and watching YouTube videos and failing, I decided to get mentorship. I decided to pay for coaching, right? Crazy, right? Even crazy for me thinking back at it because I'm very cheap and very stubborn. I'm always kind of just like, hit it until it works by myself type of person. But even after paying for coaching, so investing in my education, I still struggled because I approached it with the wrong mindset, right? My mindset was this: I'm going to pay for education. This guy is going to teach me a magic strategy. I'm going to blindly follow that magic strategy. I'm going to make a lot of money. And that did not work at all. It wasn't until I focused on learning how to trade, right? The actual skill of being a chartist, the skill of technical analysis, the skill of reading the language that the market or the story that the market has to give us. It wasn't until I focused on that I became better in my trading. And the cool thing about it is this, and this is after 10 years of experience or whatnot. Many of us, when we're new, we start off looking for this strategy. And I even encourage traders to start off with a single strategy, and it simplifies something. You don't want to overwhelm yourself and do too much at once because it's going to lead to negative results, usually due to a lot of psychological mistakes, due to having, kind of trying to get a sip of water by drinking through a fire hydrant. But I think as a trader evolves, they kind of go backwards. They go from a single strategy with very specific rules to multiple strategies to just kind of a pure price action type of deal. And the question that I was asked on Instagram was how many of the strategies at Tier 1 or how many of the strategies that we teach at Tier 1 trading do I personally trade? And that's always a tough question to answer because we do offer strategies, right? I'm looking at the mastery course, which is the third course in the progression right now, and I'm just looking through the modules right now. We got Fibonacci basics. That's not a strategy, but we got the Fibonacci inversion strategy. We got advanced pattern formations. We got the Greystone trend continuation trade. We got the follow the bear, the 2618, the CTS combined technical score, head and shoulders, swing trading the trend, daily chore, daily reversal, right? So we have all these things that we classify as strategies. However, I don't really, and maybe it's I see the word strategy as different. I don't really see them as strategies. I see them as small pieces of a puzzle that you can really create to be whatever you want. And here's what I mean. So in general, when we set up the course, and for you guys that have been through the Foundation series, Foundation 1, Foundation 2, where we're just talking about a pure study of price action, we try to look at things as not being specific trend continuation, not being specific counter trend, right? We look at the full realm of trading, right? There are three essential ways you can trade. You can trade reversals, right? So the market is reversing. You can trade reversals within trend. You can trade reversals out of trend, right? You can trade breakouts, right? You're trying to get involved in the market as it breaks in a certain direction. Again, it could be a reversal, can be a breakout. The market could break out after a reversal point. A market could break out after a continuation pattern. And we trade pullbacks, right? The market pulls back. So the market goes from an extreme after making an extension, a move in a certain direction. It pulls back, giving relief, and you look to get on the next extension. But again, at the same time, you can look at that. You can be a pullback trader and not trade the next extension, right? So I don't like classifying the basic elements of price action into certain categories. And you've heard me over this podcast talk about wanting to get away from the terms trend continuation and counter trend because I think it really limits us. And the word strategy limits us too. Now, again, I don't think it's a bad thing for a newer trader because as a new trader, you need very tight rules. So one of the things that I do consider a strategy, and this hopefully should explain kind of what I mean by strategy and not strategy, are advanced pattern formations, right? Advanced pattern formations are Fibonacci-based patterns where they typically form in levels of consolidation, not all the time. I'm actually in a one right now that I'm hoping to use at least secondary targets as a trend continuation trade and get maybe a couple hundred more pips to the upside. We'll see about that. But in the most part, advanced pattern formations form during areas of a consolidation. So when the market's going up and down and up and down, and it's a series of moves in the market, it's a series of retracements with no real long-term directional moves that come to certain Fibonacci levels. And when those Fibonacci levels are hit in a very specific order, they offer some high profile trading opportunities. Year to date right now, this is last day of January 2021 that I'm recording this. I've taken about 18 trades to start the year. Probably about 10, 12 this year so far have been advanced pattern formations just because of how the market has been moving. So they're really good setups. Now, usually you see a lot of newer traders flock to these because they are very specific in their rule set. Aside from the subjectivity that is needed to identify the initial impulse, like the X leg, so the starting point of the pattern, after that, it's pretty black or white, right? Did we hit this level? Yes or no? Did we hit that level? Yes or no? Did we get here? Yes or no? It's kind of dummy proof after that initial step. And with pattern formations, there are no rules about higher time frame analysis. The overall trend doesn't have to be in the same direction. It doesn't have to be this. It doesn't have to be that. The RSI doesn't have to do anything. You don't need any indicator confluence. Obviously, you can add this stuff if you want, but it's not necessarily. It's basically when you check off all these boxes or when what's on the chart checks off all these boxes, you take the trade. And something like that I consider to be a strategy if you're going to trade it that way, because you're trading it regardless of anything else, right? Of anything else that's happening in the market. Now, when it comes to other stuff like Fibonacci inversions, you may not know what that is. So other stuff like, let's say, a double top or a head and shoulders pattern or a pullback trade, those are going to be a little bit different in my opinion, because if we just take the double top, just because that's a commonly known one, I made the mistake, or an AB equals CD pattern. I made the mistake as a newer trader, again, thinking a double top or an AB equals CD pattern, which is a technique. I made the mistake of thinking it was a strategy. So I went into the market and tried to trade every single double top I saw. I tried to trade every single AB equals CD that I saw, and I lost money. So unlike pattern formations, they can't stand alone. So I don't consider it to be a strategy. However, a double top could be used as part of a strategy. So for example, we have something called the CTS system. This was taught to me by my mentor, Combined Technical Scoring System. It's a way for you to quantify trades. Basically, you assign a point score to the different techniques or different things you see in the market. And when you have a certain point score, you can take or take the trade. It basically judges how good or bad the trading opportunity is. Higher the point score, the better the opportunity. Lower the point score, the worse the opportunity. And this was actually a strategy that I started off trading. And the best thing that it did for me is it gave me a routine. It taught me what to look for, and it gave me consistency in what I was looking for in the markets each day. But for example, so a double top and an AB equals CD pattern are horrible if you trade them by themselves, right? You're going to lose money, you're going to bleed out fast and die, right? Man, it's a Sunday morning. I'm starting off all violent. But seriously, that's what's going to happen. I've been there. But those techniques could be part of a strategy. So let's say I add some other stuff. Let's say that I'm going to be a reversal trader. So I'm someone that's looking to catch the end of an extension, an end of a directional move, and I'm looking to catch a pullback, a little area of relief, a counter trend trader. Well, let's put it like this. If I have an AB equals CD pattern, then I look left to see if we're at a level of major structure. If I look left and see that we're at a level of major structure, then I look for double top to form at the end of that AB equals CD completion. If double top forms at the end of that AB equals CD completion, then I get short. So you can see that I'm using the AB equals CD pattern. I'm using the double top, which are two things I said you should not use by themselves, but I'm combining them all together in something that works, right? Whereas they may not be powerful by themselves, if I have an AB equals CD pattern at a level of structure, that adds to its power. Maybe I even add a Fibonacci if I have Fibonacci influence there as well. If I have a double top at that same area, that adds to its power. So now what I've just done is I've created a strategy where my specific strategy, using these different elements that we teach, right? My specific strategy is I am an AB equals CD pattern trader that only trades it when it happens at major structure if I get a double top for my reason for entry. And that is how I specifically trade. So again, I don't, and this is why I don't want to put a blanket on the word pattern, because if I gave that same situation to someone else, maybe they add something. Maybe they add, hey, I need Fibonacci influence. Boom. Now that's their strategy. Or maybe I add, I need the RSI to be overbought. Boom, that's their strategy. Maybe I need to be below a moving average. Boom, that's their strategy. What we're trying to do here, no, not what we're trying to do, what we are doing here at Tier 1 Trading is we're teaching you how to trade, right? The skill of how to trade, and we're empowering you to take those elements and put it together to find a way that specifically works for you in what you're trying to achieve. And that's what we're working with our traders on a daily basis with, right? I can't tell you the amount of emails and Q&A sessions that we have where it's like, hey, I'm thinking about doing this, I'm thinking about doing that, I'm thinking about doing this. How should I test that? Where traders on the platform are asking each other, hey, does anyone try this? I was thinking about doing this, just want to see if it's worth it. That is the beauty. Everyone is taking the concepts and the elements that work, and they're custom fitting it to themselves, their personality, and their situation, right? I look at it like I was a basketball guy growing up, and back when I was playing basketball, you get designated by a certain position. Matter of fact, soccer may be a better reference point because you sometimes have a roamer. So let's say you don't have a normal 10, right? You don't have you have a kind of a half midfielder, half striker. Let's say you have your best player, right? They don't have a position, right? They're not a forward, right? So they don't have to stay up. They're not a winger. They don't have to stay on the left. They don't have to stay on the right. They're not a fullback. They don't have to stay back, right? They have the option to roam in the middle and be creative. You see this used with Cristiano Ronaldo a lot in many instances where he has the freedom to roam. He doesn't really have a position. Now, it doesn't mean he can do whatever he wants, right? There's a reaction. There still has to be the proper spacing. He still has to put himself in the proper position when he wants to. But he has that ability to kind of take the game and be creative within it. And that's what we're trying to do here at the platform. We're trying to give you, and that's how I classify myself as a trader, right? I can trade double tops. I can trade 26-18s. I can trade head and shoulders. I can trade pennant patterns, flag patterns, all of that stuff. But I can only trade it if it works within the realm of my overall analysis. I like saying this a lot, right? We do a process called IPDE, identify, predict, decide, execute, where we identify what's happening, we make a prediction based on what we identify, we decide how we're going to get into the trade, and then we execute the trade, right? If I'm identifying and I see and I identify that we're in a situation where the market is likely to go bullish, and I go down to a lower time frame and I see a bearish trade, well, maybe I can't take that trade at all, even if it's an AB equals CD pattern with a double top, right? Maybe I can't take that trade at all because it doesn't fit within my overall analysis. Or maybe I have to find an adjusted way to take that trade so that it does fit my overall analysis. Maybe I have to be more aggressive with targets because I know that this potential bearish move is only a small part of the bigger bullish move that I'm predicting. And that's why I don't call what I do having a strategy. I just like to call myself a pure price action trader because I do have that flexibility. So I hope that made sense. I was kind of all over the place. I'm not even sure if I hit on the subject that I wanted to talk about originally, but I guess what I'm saying is this, and it's tough because this is what you get after experiencing the market. As a newer trader, you do want to dial down on one thing. You can still be creative like I talked about, but be creative with one thing. AB equals CD pattern at structure with double top and stick with that. Don't try to do that and do advanced patterns and do this and do that at the same time. You're just going to confuse yourself. How I evolved in my trading is I started with one thing, and then as I mastered that one thing, right, it became easy. I ran on autopilot, and it allowed me to take time to really introduce the new things. So what you're looking at right now for you guys that come into the live trading room with me each and every day and you see me doing a million different things at once, right? I didn't start off that way. That came over the past 10 years of just slowly adding different stuff, right? For you guys that were with me, 8 years ago, you never heard me mention breakouts, right? Flags, pennants, stuff like that, ascending triangles, never even cared about that stuff because I wasn't at that point in my trading yet. But as I evolved, right, I learned more about price action. I started adding more tools to the arsenal, and I fit all of those tools within my general philosophy of the market. So hope that makes sense. If it doesn't, you guys know I'm very open on social media, so you can always hit me up with a message and ask. You can have my email as well. It is Akil, AKIL, at tier1trading.com. Social media, it's Akil Stokes, RTM. Once again, if someone ever comes out and DMs you or asks you for money or claims they can turn all of this into Bitcoin for you, they are frauds. Block and report them because there's a good chance that they already have me blocked, so I cannot do it myself. But if it didn't make sense, because I feel like I didn't maybe word this the best that I could have, and that's the result of these podcasts being sporadic, hit me up with a message and I will gladly explain. You guys enjoyed the episode. If you did, do me a favor, leave me a rating and a review. It is by far the best way you can support what I'm doing here at the Trading Coach Podcast. It is the best way we can continue to grow the show, reach more and more traders, and hopefully change the landscape out there in this trading world. So I'll see you guys next episode. Thank you in advance for the rating and the review. And until next time, plan your trade, trade your plan. Take care.